Welcome back. Now, February was a good month at the factory gate. Post a poor start to the year, the Absa PMI is back in positive territory, rising from 43.6 to 51.7 points during the period, largely driven by increases in business activity and new sales orders. Are we out of the woods yet? Miyelani Maluleke, senior economist at Absa, joins us with his analysis of the data. Thank you so much for your time, Miyelani. Now, the PMI did go from contraction to expansionary territory. I was ready to pop out the champagne until I saw a cautious tone in the report. Should I just hold off?
Yeah. Yeah, look, we always have to be cautious. It's 1 month set of data. As I always say, you want to see a few more prints of the PMI being above 50, I think, before we can be comfortable that we've got a recovery that's on a much firmer footing. But I think the other interesting thing as well, Nachi, is that when you look at the headline PMI, it's above 50, but when you look at some of the key underlying sub-indices like new sales orders, like business activity itself, those are still not quite above that 50-point that's a 50-point threshold. So that tells you that there is still some underlying softness here. And I think for us, we just want to see a few more prints sustaining this trend that we're seeing in February before we can be comfortable that maybe it is time to pull out a bottle at least.
And speaking about those sub-indices, I just want to talk about these new sales orders as well as what we're seeing with inventories here. We saw really steep jumps, from 37.2 to 49.9 for new sales orders, and also inventories also in the high 40s. It did look like something fundamentally changed in the month of February. What could it possibly have been?
Yeah, so there's a couple of things here that are coming through. I think on the demand side, of course, the one issue that we've been talking about is the strength of domestic demand, which has been under pressure for some time, given the strain that we have seen on the consumer side. But the second issue in terms of demand, this kind of relates to some of the infrastructure issues that we've had, particularly at the ports, where we've actually had manufacturers saying, the export orders are there, but it's proven a bit difficult to actually satisfy them because you just can't get product out quickly enough. So that was actually coming through in the new sales orders index. And I think some of the improvement that we're seeing in February here, and it's feedback that we're also getting from manufacturers, is that, yes, those port constraints are still there, but they do seem to be easing a little bit relative to some of the sort of congestion problems that we saw late last year. And I think that may be sort of partly what is explaining this improvement in new sales orders. And I think, of course, that also kind of plays out, in terms of inventories, because manufacturers have said to us, it's hard to get some of the input that you need for your own production processes domestically because of these port issues. So it doesn't just affect your ability to export, but you do need a lot of imported input. So that really does explain, I think, a huge part of some of these movements that we're seeing come through in the February data.
Yeah. Miyelani, do you think that, because of that, do you think that we could maybe start to see something significant happening structurally in terms of manufacturing a capacity for, locally manufactured inputs?
Well, I think the challenge, of course, is that, it's hard these days to even speak of a manufacturing sector that just exists in a particular market, right? The world has become so globalized that even some of the big manufacturers around the world will be sourcing various inputs for all kinds of things from all over the world. So one's ability to move product, get inputs in a timely manner is always going to remain critical. Even in this space where, you may sort of kind of want to make the argument that because it's hard to get stuff from outside, maybe that creates scope for more local production. That ultimately runs into constraints when people need inputs from abroad and they can't get them timely. It is competitiveness in a big way.
Speaking about that globalized world, let's talk about the rand and how that affected purchasing prices over this period.
I'm a little bit concerned about that. I've been hoping personally that inflation starts to come down in a sustained way, and maybe we start to see the South African Reserve Bank relaxing at least its language a little bit. But we're seeing manufacturers saying here that the weakness that you've seen in the rand is certainly translated into higher input costs for them. The export benefit is not as large for reasons that we've already discussed, but it's a little bit of cost pressure that is coming through. We did see PPI inflation as well. I think the numbers came out yesterday, pushed higher to about 4.8%. So we'll have to see how that kind of translates into producer inflation. But there is some concern that is coming through from manufacturers from that perspective.
Despite all those concerns, manufacturers do expect business conditions to get better. Interesting, since we've got elections in a couple of months, is it that manufacturers don't perceive the elections to be a significant risk effect for business conditions?
It's a very good question. It's hard to know, but I think there are good reasons. Manufacturers will be saying, looking at the last few months, looking at the next 6 months, there's probably reason for the next 6 months to be better. As we've said, the logistics blockages do seem to be easing a little bit. They're certainly not going away. We need to be clear about that. But they're certainly easing relative to kind of where we're coming from late last year. And secondly, electricity supply. I mean, manufacturing is one of the most energy intensive parts of the economy. There's been a significant amount of moderation in the intensity of load shedding. And I think given the fact that Eskom is sitting with a bit more capacity now than most of last year, one can be confident that we're not having a 2023 as far as electricity supply is concerned. And I think those two factors, are good reason to be a little bit optimistic about the near term, even as we face the uncertainty of elections and what that will mean for South Africa.
Well, Miyelani, with that said, let's touch base again in a month to unpack this data and see what's emerging from that long-term trend. Thank you for your time today. That was Miyelani Maluleke. He's Senior Economist at Absa.